Hi, it's Mr. G here, and today we're going to be going over 2.2, the balance sheet. So with the balance sheet, we're going to be looking at the features of them. Okay, so this is what we call a balance sheet, and there's going to be different types of balance sheets. But this is, one of the first financial statements you're dealing with, and so you're going to get the hang of how to do this. Now, there are going to be different styles to balance sheets, and if you look at different balance sheets, if you're looking at stocks or whatever, they will look slightly different. But this is a basic one. And we're going to be looking at the main features of it. So if we look at a balance sheet, let's have a look at what we can see here. So first of all, if you remember the fundamental accounting equation, assets is equal to liabilities plus owner's equity. So we figured that out in 2.1, why that is. Assets is something you own, liability is something you owe, owner's equity is your net worth, the difference between assets and liabilities. And both of those should equal out. And so if you think of a balance sheet, what it's saying is these sides should balance. It's like this equation. On the left side, we have the assets. And if you add them all up, it should equal to the liabilities that the person has as well as their net worth. And so if you add those together, you should come up with the same amount. They balance. And we use that with the fundamental accounting equation. So when you're working through this, remember that as you're doing it. So these are the assets, and notice they're listed in order of liquidity. And you're like, what is liquidity? The order in which the assets are converted to cash. So what does that mean? Well, if you think about cash on hand, cash you have in your pocket right now, well, that's really liquid. It's already cash. It's already cash you can put out, you can spend. How about a bank balance? Well, if you think about a bank balance, you can go to the bank, you can withdraw money, and you can spend it. Still fairly liquid. It's not as liquid as cash in your pocket because you already have it. Then there comes accounts receivable. So you lend some money to a friend. Well, you can go and ask that friend for the money, but sometimes they may not have it. It's not as easy as cash that you have in your wallet, and it's not as easy as going to the bank, because the friend has to be able to pay you back at that point. And then comes supplies. Can you imagine staplers and staples? They're worth something. You could probably sell them for something, but it's not as easy. You'd have to sell them first to convert them to cash to then basically do something with. And so then we go into land and building and rental equipment. And, to sell land, you would have to get, real estate agents and have it listed and find a buyer and go through the whole process to convert it to cash. And so that is how we organize basically assets. They're listed in order of liquidity from most liquid, which is cash on hand, or bank. Bank is typically what I would always expect to be first. If we have cash on hand or petty cash, that would be before it. But typically in this course, you can always put bank balance as the first one. Okay? And then usually longer term assets are put towards later. And so try and remember the order as you're going through with this. Now, accounts receivable, you're like, well, what is accounts receivable? Accounts receivable is a list of customers who purchase goods or services but will pay at a later date. So if you have a cell phone or something, you'll get a bill and, you have to pay then for it. And so that's essentially you're owing the money. And so it's the same in business. If someone does, gives you a good or service that you haven't paid for, well, you owe it. Basically to that company, and it's an asset. Just like if you lend money to a friend, they owe it to you, so it's considered part of your assets. Okay, and notice how there is an order, so it's accounts receivable. Sometimes they're going to put in debtor. Is essentially what accounts receivable is, but you don't write debtor in here, you write in accounts receivable, okay? But a debtor is someone who owes money to you, a creditor is someone you owe money to. So essentially accounts receivable, and notice that they're in alphabetical order, Boa and Burns, so it's by last name in alphabetical order that you need to put that in, okay? They are in debt to the business. Anyone who owes money to the business is a debtor. Okay, so debtor, if you see that word, and you will see it, make sure that you understand it's an accounts receivable, someone who owes money to the business. Accounts receivable is abbreviated as A/R. You don't have to write in accounts receivable. A/R is completely fine. Names of customers are listed in alphabetical order by last name and listed after cash, as accounts receivable are usually collected within 30 days. Okay, so they're not usually 30 days is when they convert it over to cash in a business purpose. Okay. Supplies and long-term assets are listed last, as they're not typically converted to cash but are used in the operation of the business. So these are usually not cash. We usually don't convert it to cash. And so these are what we call long-term assets, and so they're typically towards the end. The order shown here is what you'll see in the textbook. The proper order is to list them in the order they will get used up. Okay. So now let's go over liabilities. So listed in order of when they are normally paid. So we had liquidity for assets, and liabilities, we're listing them in order of when they normally get paid. So accounts payable is a list of suppliers who the company purchased goods or services from but will pay at a later date. And they are put in alphabetical order as well by name of company. They are the amounts owed to creditors. Creditors is basically people you owe money to, businesses you owe money to. Debtors, people who owe you money, which is an asset. This is who you owe money to. It's a creditor. And a creditor is anyone to whom the business owes money. Abbreviated as A/P. Individual creditors are listed alphabetically, listed first in the list of liabilities, as they're typically paid within 30 days. So usually we put it in order of when we pay them. So accounts payable is usually 30 days. Bank loans, mortgage payables, mortgages, people can have those for numerous years. So those are longer terms. Bank loans usually shorter time. And so it's order of when you pay it. Now, if we're talking about owner's equity, it's listed separately from liabilities. It shows the owner's name plus the word capital, and this is how we do it with a sole proprietorship. It's different with corporation and partnerships. The figure is the difference between total assets and total liabilities. Okay, so that essentially is some of the features of a balance sheet, and so you can go through this. You should know how to organize and structure this and how to put things in order. And notice then as well on the bottom that the two amounts equal. So the bottom amounts, those should always equal. So in this case, it's $239,561.40. Okay. So here are some of the formatting conventions that we deal with when we're dealing with a balance sheet. So same balance sheet, what we're looking at is the title. So up at the top, it has to be in this order. It's who, what, and when. And this will be for all the financial statements. So it'll ask who is the company that we're dealing this for. What kind of financial statement is it? It's a balance sheet. And when. And so for a balance sheet, we put in a single date. We're getting a snapshot of what their assets, liabilities, and owner's equity are as of that specific date. So who is the name of the individual business or organization, what the name of the financial statement, and when, the date on which the financial position is determined. Now we put in subheadings. So you write and underline subheadings for assets, liabilities, and owner's equity. Make sure you put those lines in, to kind of distinguish it. There are different formats, everything else for balance sheets, but one of the purposes of balance sheets is to make information clear and concise. And so the reason we do a lot of these formatting ideas is that whole idea of making things clear, easy to read, and concise. So it's very easy for people to go through and figure out what's what. Even for me marking tests, if people put things out of order, it takes me longer to mark the test because I'm not expecting it there. Same with people reading these statements. You're not expecting it at those particular points, okay? So subheadings, write and underline subheadings for asset, liabilities, owner's equity, and make sure you do underline those. Single ruled line before all subtotals and totals. Make sure that when you have basically a subtotal, that you're putting a line. And those lines aren't quite as easy to see. They're in the white there, where the red is there, but those are lines, and don't forget those. So whenever you're adding up several different ones and you're coming up with a subtotal or a total, you need to do a single ruled line before them, okay? And a double ruled line is after all the totals. So there's a double ruled line in there, okay? So it's in white. It's a little harder to see, but essentially there is a double ruled line there. So remember the lines when you're going through that. The totals should be on the same line. So when you're putting in the totals, make sure that they are on the same line. Now, dollar signs are placed with the first amount in every column. We don't put a dollar sign for every single amount. We only put it for the first one, okay? A dollar sign is also used beneath each single ruled line. Okay, when you put dollar signs for everything, it looks very messy. It's much harder to read. And so what we're trying to do is indicate that obviously we're using dollars and putting those in for the first ones, but it looks as an indicator, so you kind of know and you're able to navigate much easier by following these conventions. Okay, so you can see where the dollar signs are placed. So they're placed at the first amount in every column, and they're also placed beneath each single ruled line. Okay, so remember to do that formatting. Use column or paper to keep figures aligned. So even dollar amounts may be shown as 00 or dash in the cents column. Okay. Notice decimals and commas are not used. We don't typically use that. If you don't have column or paper, then you can write it just normally, or you can kind of break it apart when you're doing that. Now notice when we're using column or paper, this is the thousands column. This is the hundreds column, the tens column, the singles column, and the cents column. So the first number is actually $40.20. Bank on balance is $710. Accounts receivable WBOA, $131.50. So remember, it's not $4,020 for cash on hand. It's $40.20. So make sure that you're using the column or paper correctly. Okay. All right, so with that, we are covered 2.2, kind of how to create a balance sheet, how to format it, how to put it together. And so that is it for 2.2. All right, this is Mr. G. Bye for now.